Hey everyone, Rob Foglia, Foglia Properties at Keller Williams Realty here in Nashville. And I just wanted to come to you live today and walk through assessing a potential rental property. I've got a property pulled up here in Clarksville that's relatively close to a couple of other rentals that my wife and I own. And, I'm just going to walk through, I'm scrolling through some pictures while I'm giving you an introduction here, but just wanted to walk you through kind of my thought process on whether or not I'd buy a rental, what the market looks like right now for rentals, and just advice to give to investors and potential rental property owners out there in general. So let's dive in and let's look at this one. I chose this one for a reason. Mainly location, the fact it's move-in ready or turnkey. I said location because my wife and we own a couple of rental properties in this area, right off of this exit here in Clarksville. I think it's a great location. It's real close to everything. It's right off the interstate, which makes it a fantastic spot. So you've got potential renters, that could live in Clarksville. You got people who work in Clarksville who want to live here, but also people who might be in Kentucky, because you're right next to the border, and it's really not that far from Nashville. I mean, you can be downtown Nashville from here in 45 minutes. So to me, it's a great rental area, great rental market, and yet does it make sense here for to be a rental property? And it's a cute home. And by the way, any critiques I give in terms of price or anything like that, I'm not critiquing this listing. I'm not critiquing this homeowner. I'm not critiquing the listing agent at all whatsoever. I'm just simply walking through whether or not this would be a good rental property for me based on my criteria. So let's just dive right in. This right here, it's a 3-bed, 2.5-bath home, about 1,400 square feet. It's very similar to a couple of other rentals that I own in the area. That's why I chose it. That's why I chose it to assess it anyway here. It's a little bit bigger than what we have in our, because the other two we have are basically identical. They're about 1,200 square feet, also 3-bed, 2-bath. They also have a garage, so very similar to this. This has a little bit more square footage. And it's also a little more expensive than the last one we bought. The last one we bought when rates were lower, by the way, too, about a year ago now. We paid $245 for it. So I want to walk through what this looks like with current rates and just kind of, again, assess the numbers, see what makes sense. And so I'm just going to assume this is priced correctly. This is the price that we would have to pay for it. That's just in the essence of time. I'm not going to walk through comping out a home. Obviously, I'd want to get the best deal I could on a rental property. And yet, let's just dive in and look at what this looks like. So let's just say we had to pay, what was it, $267? Just say that's market value. And just say, I'm just going to do it off camera here, 267. Say you're putting even 25% down. Your current mortgage balance would be 200. We're just going to make it to 200 even. Just again, make this a simple mathematics. So you say you'd have 67,000 down. So again, you have basically 25%. So again, we're gonna just look at what this could rent for. I know what my other two are getting right there in the area. My other two are getting right around $1,700 a month. Again, they're a little smaller and don't have that extra half bath. And yet what I'm going to do, and here's just a little rental hack that I'm going to give for anybody who's potentially thinking about buying a property to rent it out. I do not recommend this website for many things, but one thing I've found that Zillow actually does well is a rental estimate. You can see right here, their rentals estimate is what, $1,700, $1,714. It's about what we're getting on the other two that we have. I know we're getting 17 on the other two, and they're a little smaller. I'm actually going to be a little optimistic on this one, just for the sake of this video, and estimate maybe we can get $1,800 for it. So a couple of things we're gonna first off look at. One thing I like to see about a rental property is it achieving the 1% rule. The 1% rule is just something that states that you'd want to see the rental amounts for a rental equal 1% of the purchase price. So for this home, $267 is the purchase price. You'd want to see rental amounts be about $2,670 a month. That's a tall order in today's market. I'll just be real with y'all. So right off the bat, like if the numbers make sense from a monthly standpoint, this could work for me potentially. I mean, I don't mind it being around 0.7 it's a little on the low side, but it's close, for what might work for me. But again, it has to make sense from a cash flow standpoint, because this is just kind of the start, this 1% rule. What really is going to make sense is your profit and loss, because you can see right here, it's all profit because we haven't put anything in here yet. And so again, let's dive in. And I've got pulled up here my website. There's a million different mortgage calculators out here, but on foliaproperties.com, you can go through and find a mortgage calculator. I'm just going to type in everything that we just put on here. So let's say we're putting 67 down, so 200 for a loan amount. I wish interest rates were 3%. Hasn't been that way in a hot minute, especially for investment properties. I'm going to estimate, and guys, I'm not quoting a rate right now. I'm going to estimate roughly 8% for the interest rate on an investment property. Rates have ticked up a little bit. And in fact, let's just pull them up so you can see them based on the live numbers, or at least live according to last Thursday, because that's how often Freddie Mac updates their website. But Freddie Mac has 6.73 as a 30-year fixed rate mortgage closing out last week. I'm going to work off of 8% because typically investment rates are about 1% higher. And I want to just, again, keep it simple with round numbers. We've got a 30-year term. What were the property taxes on this property? 1520, if I'm looking right here, if you're curious. And again, this is the first day on the market for this home. So that's why I'd want to jump right into it if it was the right property. So what did I say that was? I'm sorry, guys. 1520 for property taxes. And then we wouldn't have PMI because what we're putting down, and $1,000 a month for homeowners insurance. That's just fine. Monthly HOA. That's one other thing I did not include. $85 a month for the HOA in this one. Now, this is not in the same neighborhood as my other rentals. And so once you include your HOA, gosh, we're up to $1,762 already per month. That's with 25% down. So here, I'll subtract it just because of what I have on here. 1677 we'll say, and then 85 a month for that. Oops. 85 a month there for HOA. Property management, typically they're going to charge roughly about 10%. And so we're going to plug this in 0.1 times, and I'm putting my Excel skills on the spot here as I am not Mr. Spreadsheet, and yet at the same time I can do something simple like this. So anyway, you can see basically a couple of things I want to explain. First, property management. Y'all could opt to manage a property yourself. And here, let me zoom in on this so y'all can see it a little bit better. You could opt to manage a property yourself. That would save you $168 a month for this example. I choose to hire a property manager. I've got a great one, and if you're looking for a recommendation, reach out to me. And yet, I've got a great property manager, and the reason why I have that property manager in place is to save me time. It is well worth $168 a month for me to be hands off on my rental properties, for me to make these as truly as passive as they can be, because there is really, in essence, no such thing as a truly passive investment if you think about it. All investments, even buying stocks, you have to choose what stocks they are. You have to keep your eyes on the market, decide if you're going to sell them. Rental properties are the same thing. Like right now, I'm actively shopping for a rental. That's an active, that's activity, I guess is the word I'm looking for. And that's activity that I'm taking. It's not truly a passive, it's not a passive investment. And yet it can be passive to the point that once it's purchased, I'm only alerted if something's going on. Otherwise, I'm making profit every month. That's how I like it. So again, you can decide if you wanted to pay that. For me, I'm gonna pay it. Vacancy and reserve and repair reserve. Both of these right here, you can see about 10%. This one, I might even not need to have it be quite so high. Reason I've got that as a blanket rule, 10% is simple. Vacancy, that probably should stay at about 10% just to be on the safe side. But the repair reserve, it's a 6-year-old property. Hopefully, knock on wood, if I were to buy this one, the roof would have a good at least 10 to 15 years left. The HVAC hopefully would have at least 10 to 15 years. Those are the biggest ticket items that we're going to come across. And so, point being that, I'm going to include these for anything that I'm looking at, because I want to be on the safe side. And yet at the same time, just want to think about it. And again, you can decide if you want to have a vacancy reserve in there, a repair reserve. For this one, my repair reserve might be a little smaller if I chose to. And yet at the same time, I can tell you right off the bat, looking at these, and it's a loss, I'm not buying this. Even if let's just take the repair reserve out for a minute, right? Let's just say, or maybe we're budgeting instead of 10% of gross rents, we're budgeting, I don't know, 5% of gross rents, right? So let's just change this for anybody watching. So that's $84. So it's still in the hole. let's just say vacancy. Maybe let's just say hypothetically, there'd be a great tenant lined up, and we're still concerned that over time that tenant might leave. Well, let's also put 0.5%. So there's 10% budgeted for vacancy and repair. It's still in the hole about $300. Yes, if you got rid of property management and you got rid of the vacancy and repair, it would be profitable, just barely. And that's again with this 1,800 being a little on the optimistic end. For me, this would be a pass. It's nothing against the property. It's a cute property. I think it would probably make a really nice rental if rates were lower, because rates have played such a major factor into the numbers. In fact, here, let's just play around with this real quickly. You can see we had an 8% interest rate plugged in. Let's just say they were back down to what we would see maybe 18 months ago for an investment property. Let's just say they were 5%. Now all of a sudden it's 1283. 1283 is making a lot more sense here, because 1283, just plug that in. Now all of a sudden, even with these things, it's profitable $200 a month. Take these two out, it's profitable $300 a month. And then obviously over time, market rents should rise, and there's going to be a lot of different factors that will come into play. And yet interest rates are the biggest thing that would make me say no to this. Nothing against the property, nothing against the numbers, and it might be priced accordingly for an owner occupant. But for me, as an investor, I'm passing on this. Now, I want to bring up one thing to my fellow investors out there. In fact, I was talking with a friend of mine who's out of market, so he's not in the Nashville area, and he was telling me about this, basically like this investment company shopping investment properties out to people. And I don't think they're a real estate company. I won't give their name or anything. But anyway, long story short, what he was sharing with me is that they used to say with every property they would throw out there, estimated return of $300 a month or $500 a month, or this is what you should expect to make every single month on this rental property. And yet the reality is now, because rates have gone up and because they're calculating just like we are right here, instead of a 5% interest rate, they're saying, hey, maybe it's going to be an 8%. That's probably if we're lucky, to be quite frank. It might even be closer to 8.5 right now. But again, you saw that was 1677 in here for your PITI. It's not profitable. Now what they're doing, this investment companies, instead of saying, hey, it's going to make you 300, 400, whatever a month, they're saying over time you should expect X amount of a return. And please, y'all, hear this with caution, that whenever you hear something like that, hear it with caution. The reality is nobody can predict the future. We don't know what the real estate market's going to hold. We don't know what appreciation is going to look like. We can absolutely speculate and say long term, this is what we've seen the market do, that historically it's appreciated X%. And we can look at things that way, and there's nothing wrong with doing that if you choose to. And yet just know that there's no guarantee with that. Just like all the lenders that are out there that are saying buy now and refi later, like, yeah, you might be able to refi at a lower rate later, and yet we don't know. And so please operate with caution, operate with the way the numbers look today, because that's what makes the most sense. That's what matters the most. You've got to operate with these numbers, not with the optimistic approach that it's going to be 5% and it's going to be $1,200 a month. And whoops, I did that the wrong one. But you don't want to look at it optimistically and say, hey, it's going to be $1,200 a month for my mortgage. Now, even with a property manager, even with vacancy and repair, I'm making $300. You don't want to say that, because that's how you start to get into trouble. That's how it's losing you money every single month. Then maybe the vacancy and repair wasn't enough, and you had a tenant that didn't pay, or you had a HVAC that went out. I mean, there's so many negative things that could happen. And if you're being cautious with things, and you're buying a property that is cash flowing a few $100s a month every single month, you can make up for the negative. You can make up for that HVAC that needs to be replaced, that roof that needs to be replaced. You can't necessarily do that. Excuse me. You can't necessarily do that if you're in the hole. If you're in the hole $500 a month or 400, or what were we saying before? This was about 17. So we were -3. Was that right? 17. Yeah, basically 1677. So anyway, guys, I hope this makes sense. I hope this was worth your time to watch. I'm going to plan to do about one of these a month. Would I buy it? Would Rob buy this as a rental property? And hopefully over time, we're going to start to see some that make sense. But as a whole, there are really two numbers that are going to impact whether or not a rental makes sense. And it's not even so much this, although I do want to see at least 20% of equity in a rental. But it's going to be this number and this number, because when all is said and done, That's going to lead you to this number that I'm highlighting, the profit and loss. And that's going to be what dictates whether or not it should be something that you buy. Just like you wouldn't start a business knowing that you're going into it in the hole of whatever, a few $100s a month every single month for the time being, hoping that maybe long term it's going to be all right. You'd only start a business if you could project revenue within probably 6 months. Otherwise, why would you go for it? I guess there could be some that could be longer term than that, but you get what I'm saying, that rental properties, you want to make sure you're projecting revenue really from the start. Because yes, you might not have a renter in there right away. So this might just be the market rental amount. And yet at the same time, as long as you're connected with a great property manager, they're advising you the right way, you're going to make sure that you're not looking at a loss like this one. So anyway, guys, I will cut the video off there. I appreciate y'all checking this out. If you need anything at all real estate related, whether it's in Nashville, whether it's outside of Nashville, reach out to me. You can drop a comment where you're seeing this. If you're getting this in your email, hit that reply button. Happy to help. As always, y'all, appreciate your time. Until next time, talk to y'all later.